I know your time is valuable, so I'll get right to it. Throughout this episode, I'll be giving out the exact strategies that took me from £100,000 in bad debt to building a $13 million portfolio. But this journey has given me more than wealth. It's inspired a mission to help everyday people like you take control of your financial future. So every week, my team and I pour everything into bringing you market updates and proven strategies because we genuinely believe that everyone deserves financial security. No gimmicks or empty promises, just real insights from someone who has walked this path. And to help spread these insights to others who need them, I truly appreciate if you could subscribe to our channel. When you hit that button, you're telling the algorithm that our content is valuable, which helps us reach more people who deserve this opportunity. You're joining a community dedicated to financial independence for everyone. If you do subscribe, here's my promise. My team and I will make this show better for you every week. We'll listen to your feedback, answer your questions, and continue supporting your journey to financial success. So thank you for being part of this mission. Welcome everybody to the Lunchtime Investor. In this week's episode, we will be discussing, is trading just gambling, but with a nicer name? So the idea here, and to answer that, by the way, we have Mr. James Nettleton here, who I am going to introduce in just a moment. But remember, the whole concept behind this, it's lunchtime, right? You eat, we talk. So let me introduce James. Welcome, James.
Thank you, Marcus.
Part of the Investment Mastery Leadership.
Indeed.
But raised on very traditional money beliefs.
Yes.
Yes. And then we'll talk to you about your Bitcoin story in just a moment. But maybe a little bit of background on how you joined us.
So
and while you do that, I'm going to eat.
Well, you eat away, Marcus. I joined IM about 2 years ago as a part-time CFO, having a look at the finances. And then as the year went on, I really enjoyed the product that you offered, what you were doing here, and I actually learned a lot myself. And then about 18 months ago, I came on full-time, joined the leadership team with Marcus and Madrika.
And you basically, I remember this story because you finally bought some Bitcoin after a lot of coercing, I have to say.
Yeah, to be fair.
And then you came back the next day and you said, "Oh, thank you so much. It's brilliant." And I thought, great. I don't know exactly what you're talking about. But you said, "I've sold it."
I did. I bought my first Bitcoin, and as Marcus said, it was after a fair bit of coercing. I was unsure about the cryptos at the time. I made my first step into it. Bought some Bitcoin on, let's call it day one. Day two, they gone up by 4%. So I sold, and I was very happy selling at a profit. But I thought I'd done well.
No, but do you remember? I was like, why did you sell? Why did you? That's not the strategy.
It's not the strategy, but back then my mindset was take a profit whilst I can. I could never be upset if I'm selling something at a profit. There's no downside to selling at a profit, surely. I might have got lesser of a profit than I could have.
But a lot less.
A lot less, as it happens, as coincidentally it does happen, yes.
Do you think it was the right thing to do?
But that's with the benefit of hindsight. Hindsight, it was the wrong thing to do. I could have made a lot more money holding it. But at the time, I saw the security in taking a profit. And I thought, why not take the profit whilst I can and enjoy it? And
to be honest, right, 4.53%, I think it was, within 24 hours. You know,
yeah,
you can kind of argue that maybe that is time to get out. But that wasn't the strategy. That's what I'm saying. We'd like to welcome everybody, by the way. We've got Anthony here, Elaine, Ciprian. Well, these are the people that are saying hello, at least. I'm sure there's a lot more. Kabikas, P, Stuart, Manam, and Jack. Amazing. So if you have any questions, please do let us know. What I want to start with is because I want to know a little bit about your mindset. Mm-hmm. I think that you might have some traditional money beliefs. What can you tell us a little bit about that? I mean, have you, before coming here, did you invest in stocks and shares?
Yes.
Okay.
Before, purpose of conversation, if we say before my IM and post IM. So before IM, I had invested in stocks. I'd made small amounts of profit over probably about 18 months of time. And then I left a spread bet on and I lost all of my money or pretty much everything I'd set off with in the space of a week.
Classic.
I had no strategy. I kind of thought I knew what I was doing. I clearly didn't know what I was doing. I had no strategy from which to work from.
I think a lot of people are like that. By the way, we're talking about 99% of the population out there are like that, if not 99.9%.
Yeah.
So don't feel bad, James.
I did feel very bad at the time, losing all of my money. As it happened, I went off to the Highlands of Scotland for a week, had no access to the internet, had put a spread bet on, which I thought was safe. Clearly, it wasn't very safe. came back, turned my computer on, and I saw I'd been called
spread
in.
betting and safe. That is really interesting. Okay, so what we're going to do now is we are going to look at this quick video here by Dave Ramsey. We like to play Dave Ramsey because, you know, he's a bit of a legend. He has millions of followers, and this is what he has to say about investing tips for beginners. Okay, so let's have a listen to that.
I don't invest in single stocks. They're too much risk. They go up and down and sideways, and it's even the people that supposedly know what they're doing lose their butts doing that. Instead, I invest in good growth stock mutual funds, which a mutual fund would have 90 to 200 different stocks in it. That way, if one of them goes sideways, the rest of them are hopefully doing okay, and you come out ahead. If you spread your money across several things instead of putting it in one thing, that's called diversification, and it gives you safety.
What do you think about that, what he just said? And by the way, I'm going to ask the same question of people in the audience. What did you think about that video? Okay? Try and write it now before we speak, but I'm going to ask you the same question. So what did you think?
That made sense.
Really?
To diversify. That did make sense to me. Whether you put it into a mutual fund or not, I suppose there's an ambiguity there that you could talk through. But the idea of diversification, I think, is a sound strategy. Is it not?
I agree that to diversify is a good thing. But as Warren Buffett says, over diversification, which this is, to put your money into something which is spread out amongst 90 to 100 different stocks. In other words, half are going to go up, half are going to go down, and the end result is you might make 5% a year if you're lucky. So basically, it's tracking the market. Right?
Yes.
So yeah, but there's no point in doing that. If inflation is, how much is inflation at the moment?
Inflation is now 3.4%.
He's our CFO, so he knows things like that. So 3.4%, okay, and you're making 5%. It's not even worth it.
But is there an argument against risk and reward? Is it a safer investment? And that's a question.
Well, exactly. So he's saying, don't put it into single stocks, because even the people that know what they're doing, they've had their butts handed to them and stuff like that. If you like this book here, The Intelligent Investor, I don't know whether you've ever read it. It's just a small, little bit outdated, but it's basically Benjamin Graham who says that there's two types of investors. And the one type, they should just put their money, not even into mutual funds, right? Put them into real, solid, blue chip stocks, you know, the solid ones, you know, like the Amazons and the Walmarts and the McDonald's and the Apples and the Googles, you know, the real household names that are making billions and that they're just not going to go to zero.
How do you know that? How do you know they're not going to zero? And how do you know they're safe?
Okay, so how can you not, well, this is a great discussion. So how can you not make money in something like Meta or Facebook? If you put all your money in all at once, it could either go up or down, right?
Yes.
That's gambling.
Yeah, that is gambling.
Right. But if you have a strategy, then it's not gambling. So in other words, don't put all your money in, put some of it in, and pray that it goes where? Where would you want it to go?
You'd want it to go up. So
No, thank you. You want it to go down because you want to invest more at a lower price. That's what most people, I'm really glad I asked you that question now, because that's what most people think. Put your money in, you want it to go up. No. If it goes up, oh, great, I've made a little bit of money. Fantastic. So it's okay, tick. Tiny tick, tick. But if it goes down, I can lower my price even more. And then finally, when the upturn comes, and this is where I think most people go, yeah, but how do you know the uptick is going to come? It always comes. Why? Because this isn't gambling. I don't even know what gambling is, to be honest. We'll have to define what gambling is. What it is going into companies that make billions of profits. They're a living, breathing organization with staff, with factories, with, well, I was going to say staff, but that's employees. And, and they're making revenues. They're making profits.
But how do you know they're going to continue? Everything in life at some point in time will go down or die.
Yes, but not over the next. Okay, so let me ask you a question. Do you think that Google or Microsoft or any of the kind of the big companies over the next 12 months or so are going to go bust?
I would say that it is much more unlikely they are going to go to bust than other stocks, especially, let's say, go down to the AIM market.
Right.
I would say it is safer investment.
Now that to me is a little bit gambling. That's a bit speculation.
Yes.
Doing that, but people want it because there's more risk and therefore higher potential returns.
Exactly.
And I'm saying don't do that. So I'm a little bit on Dave's side in the sense that you shouldn't go and do all this rubbish, but you should stick with the big ones. But you know why people don't? Because they think they can't make enough money. And that's rubbish, because they do move quite a bit.
If you follow a strategy, they do. But if you just go in and buy, as was my experience.
I don't know why people think that they should just go in and buy. Where did they get that from?
I think it's a lack of education, a lack of knowledge. I think that's certainly the stock market before I started at IM. I saw it as something of which I didn't fully understand.
But you did it.
I still did it, which I deeply regret, because I knew some people were making money.
Isn't it interesting, though, that people, like, you wouldn't go into a car and start driving it. You'd have to take driving lessons, right?
Because it's so easy to do it. You open an account one day, you put some money in, and there's also a bit of the FOMO. You understand you have other friends who talk about making some money. You think, well, I need to get on that bandwagon. So you open an account which takes sort of about 10 minutes, 20 minutes.
That's the challenge.
You put some money in, and you go for it. And it's exciting.
Yeah.
And the idea of sitting down to learn an education, it probably didn't cross my mind.
If you want to spend money on excitement, you need to do different things. It's actually, we call it, should be like watching paint dry.
Yes.
Or watching grass grow. You take your pick, whichever. Which one would you prefer?
I'll watch grass grow.
Grass grow. There you go. So it shouldn't be exciting. That's not what this is about. This is not about excitement. This is about growing your money. Let's have a look. So Anthony says diversification, absolutely. Matt says, for those that don't have any knowledge, yes, that's good. When you get more knowledge and strategy, he's hit it on the head.
Yep.
I mean, diversification is important. You wouldn't put all your money into Google. You would put some into... Oh, it's interesting, because if I now say you put some money in Google and you put some money into Amazon and you put some money into another tech company, you're actually not diversified. People think they are, but you're all in the NASDAQ. Yeah. You're all in technology companies, so you're not diversified. See, there's diversification, then there's diversification. So that's interesting as well.
So how would you define the ultimate diversification? How many different stocks should you go into?
I would say around 6 or so, and making sure that they are, if you can, inversely correlated, which would be amazing when one goes up, the other one goes down. But that's a bit complex. So just make sure you're in different sectors.
So is that a hedge fund structure you're talking about then? Because you're hedging a market movement on area, and a different stock in a different area is going to hedge.
But they're also doing different things. So, for example, they would be selling short, for example, while they're going long. They're doing all kinds of different things, okay? And Centurion says that volatility is a good thing, and most people don't think it is. You know, Dave Ramsey hates volatility, I'm sure. But that's where... By the way, do you like volatility?
I do now. 2 years ago, I didn't.
No.
Because I didn't like
Well, you did like volatility. You liked half
as long
of it.
As it was going up.
You liked this part.
Yeah.
You just didn't like this part, right? But I like this part as well because it allows me to get in at a lower price.
Yeah.
Okay, good. Let's see. Property. Oh, wow. Matt says property could burn down, get flooded. Likelihood of happening is low. Amazing. Okay, so let's keep going then. So Dave Ramsey's advice is avoid trading. Now, avoid trading. I want to make a distinction here between trading and investing.
Investing, yeah.
I'm talking about investing.
Okay. How would you define investing compared to trading?
I think trading is more short term. It's days to weeks, whereas investing is more long term. It will be months to years. Now, we hope it's months. Could be days, by the way, but normally months, and it could be years. And we're quite happy to do that. But people don't. They're in a rush, and that's when 90% of people go on to spread betting, right?
Yeah.
And lose 90% of the portfolio within 90 days.
And that's the mistake that I think a lot of beginners make. I know I'm not the only person I know who made that exact mistake. It's the excitement of going into it. You make a little bit of money and you think, I can do this, I can make more. And I must admit, I thought I knew what I was doing. I didn't. I now know that. Now that I've worked at IM and I've understood the ideas, the strategies, and I've implemented some of the strategies myself, I've actually learnt.
Absolutely. It's almost 1 o'clock. It's time to eat.
Oh, yes, please.
Well, that's up to you. Now, what would you do with your money now then? Or what would you have done before? Would you have done it yourself? I mean, you tried. What would have been your next step?
I suppose when I first went into it, the option was, do I give the money to an asset manager to invest on my behalf? I figured they know what they're doing. They're professionals. There's a regulation under through the FCA. So surely that is my safest, most secure way of doing it. And surely they would actually implement strategies that would benefit me, and it's in their interest.
So remember, as soon as you said those words, the safest way of doing it means low risk, right?
Yes.
So you're not going to get high returns. As soon as you say that.
My interpretation back then was they will do better than I would, and they're going to be more secure. Now, my opinion of that has changed subsequently. But I figured they're the professionals. They will know all the strategies. They will know what to buy and what to sell and when. And they've got the training and they've got the regulations. So why wouldn't I give it to them?
And that is the game that people in the city play. They basically play on the fact that they're professional, they're safe, they know what they're doing, and we're stupid and we don't know. And absolutely, that is not the case. I can tell you, when I gave my money to a fund, I was down 70%, 70, and I couldn't believe it. I was like you, thinking, how? But you are the. And I phoned them up. Literally, my heart was like pumping, and I'm like, I don't understand. How is it possible? I can understand that you maybe lost 20% or 30, well, maybe even 50, but how did you manage 70%? You know what they said to me? But Mr. De Maria, you didn't ask us to sell. And I thought, hold on. So I give you money, and I'm supposed to, but then why don't I just do it myself? And that's when I decided.
Yes.
Never giving my money to anybody else. Let's have a quick poll. What poll are we doing here? We're doing a poll, apparently. Yep. And the poll is, where is most of your money right now? Is it in the bank, because it feels the safest? Is it in mutual funds, steady and low risk? Or is it in cryptos or stocks, because you want the higher returns? I'm going to ask you the same questions. Where is most of your money right now? And remember, pre and post. But
so pre and post. So as at today, most of my money is in stocks and cryptos. I feel a lot more secure knowing the strategies of how to invest, how to look at it, and how to actually benefit from investing in them. In the bank, I'm not earning any money, or I'm not earning any money of consequence. And as you say, inflation at 3.5%, way exceeds anything I'm going to get 1 or 2% from the banks. The mutual funds, whilst they might have been appealing before, I like the idea of the DIYing it now.
why?
Now that I feel armed with my own strategies, my own knowledge.
Do you like the control, the fact that you're in control?
It is a control. It's money that I've earned. You know, I get up every morning to go and earn money. It's my own savings. And I now have the attitude, why do I want to give it to someone else to invest? I've earned it. Let me earn it, further on. Why am I going to earn that money and now give it to someone else who doesn't have the same consequence of losing the money
exactly
as I do?
I think you've hit it on the head, because nobody cares more about your money actually than you do.
Exactly. Maybe my wife, but yes, apart from that.
Potentially. So let's see what people are saying. We're going to close it now. Please do vote. Go on, just either A, B, or C. Boom. 3, 2, 1. We're going to close it now. Let's see what people are saying. Oh, interesting. Crypto stocks actually 69%. So I think we've got a lot of our members on here. In the bank, 26 was 20. Wow, money in the bank. Wow. Wouldn't leave anything in the bank personally. And in mutual funds, 3%. Okay. So Sabila says, what's James's experience with professional investors? Yeah, what is your experience with professional investors?
So I had some money. Again, this is going to pre-IM, so more than 2 years ago. I gave some money to an asset manager to invest on my behalf.
Okay, here we go. Go on.
1 year, he made 20%. That's very exciting.
Yeah.
And then since then, I've maintained reasonably static returns. Probably inflation beating, around the 4 or 5%. The big 20% he made for me, I then lost 10% the following year. And because it's 10% of a higher amount, it actually equates to only making a net gain of 6 or 7%.
Do you know what the challenge with that strategy is? When they don't do very well, let's say they do, 3.5%, 4%, and they're quite proud of that, is you don't actually know how they did it.
No.
And if they lose you money, you didn't learn anything out of that mistake. Whereas if you do it yourself, you go, oh my goodness, right, I learned something, so I'm not going to make that mistake again. And over the years, unless you learn with us, of course, over the years, you will then know what to do.
And that's the knowledge that I've gained in the last 2 years, is I now know what to do. I've got a lot more to learn, mind you, but I've had an introduction to it. I've learned some basic strategies. And as I said before, I now feel armed. I can go and do it myself.
Yeah.
I feel empowered to do it.
Yeah, perfect.
I don't have the reliance on others to manage the thing that's actually probably, outside of family and relationships, the most important to me. If I want to care for my family, I need to manage my money correctly. And there's no better person, as you say, to do that than myself.
Agreed. So there's some common objections here to trading I'd like to discuss, like it's just gambling with extra steps. What do you think about that?
I think there's an element of trading investing with gambling if you don't know what you're doing.
Always.
It's gambling as, let's define gambling, let's say it's the unpredictable nature of going into something, or the unpredictability of doing something.
But that does sound like stocks, unpredictable. I mean, when I go into something, I don't know, now listen closely, when it's going to go back up. I know it will eventually, but I don't know when.
But that's because you have a strategy.
Yes.
I think it's gambling if you go in and, let's say, uneducated or with no strategy. If you go into investing, as I did, and I lost my money thinking it sounded good investing in, a given stock, it becomes less gambling once you've got that strategy. So you can actually go in knowing what you're doing, being armed.
I don't want to take the other side, but do you think that gamblers listening to this will say, well, I have a strategy. I have a strategy. I mean, some gamblers, they make a lot of money.
I thought I had a strategy. So let's be very clear. 2 years ago, I thought I had a strategy.
Well, what was the strategy?
I used to wake up early in the morning, and I'd read the RNSs, mainly on the AIM-listed stocks.
I don't even know what the RNS is. What's that?
It's an announcement. If you have to give an official announcement as a listed security, you do that announcement through the process of an RNS.
Okay.
Now, what RNS actually stands for, I'm not sure, but maybe we can find out. And that gives an announcement like a profit warning, for example, or a material event that has happened in the business. I'd wake up early in the morning and I'd read the RNSs and I'd have a look, see if there's anything exciting. Let's say they've won a big contract or something that might make the share price go up.
That is not a strategy, man.
It wasn't, and I now know that.
But do you know why? Because by the time that happens, the news is out. If you're reading it, it's already in the market. It's already in the price.
Yes, it's already been built into the price of the stock. That's what I did. I didn't get the education, though. I thought I knew better.
Right.
Maybe an arrogant self, let's call it.
What about this? I'd rather leave it to the experts. I mean, you did think that, right?
I did think that, and that's what I did.
Yeah.
But then I learned that the experts don't care about my money as much as I do.
Correct. Nailed it. Okay, what about this one? You can lose everything.
I did. Well, I didn't lose everything, but you can lose everything.
How can you lose everything? How?
I put a spread bet on.
Okay, so you're talking about leverage.
I invested with, again, no strategy, invested with the leverage on a spread bet, and I lost it all.
People, please listen to this, right? Avoid leverage until you really know what you're doing. Do not use OPM.
I can only concur with what Marcus is saying. I did that, and I made a huge mistake.
Yeah.
And I hope if anybody's listening to this, they learn from that. If you're going to use leverage, make sure you know what you're doing, and let me be the example of that.
Yes, absolutely. We got a couple of... What would James now suggest to someone with no experience or never invested in anything? What would you say to them now?
I would say get some education. I would say just be patient. Don't fly in. Certainly myself, I like to give things a go, and I thought I can do this. I set up my account and I went for it. I'd stop. I'd try and learn about what I'm doing because it's my money that I'm investing here. Let's get some basic strategies. Let's get a basic course. Let's understand, what can happen and how I should best use the market movements to my advantage.
Just chuck some money in. Let's see what happens.
Huh? That's what I did, and I strongly advise people not to do that.
Do you think people want to pay for that though? Because the word education, I love the word because it's made me many millions. But most people think that education stops as soon as they leave school. O-levels, that's it, they're gone. It's like at least Dave A-levels. No, that's it, I'm gone.
Education is you do associate it with school, and it might not resonate with someone going, I want to go and get educated.
Let's call it something else then. Learning, training.
You could call it learning, or you can call it training. I would just say it's a way of securing your future.
I mean, that would be amazing, absolutely fantastic. By the way, if you want the strategies that we're talking about, make sure that you get that in one of my books, The Lunchtime Trader, and you can get the details down below. Talking about lack of education, can we show this slide, or is it too much to show this? The trading ruined my life. Now, again, notice he's talking about trading. Yeah. He's 27 years old and broke, and been trading since he was 19. Now here we go. Watch this. I've tried signal groups. This is where you follow somebody else's signal. So no strategy, you just follow somebody else. Right? I've been scammed out of being offered mentorships. I don't know. That sounds like education, but I don't know what that was. I've tried trading options. That's massive leverage. You do not want to do that.
That's dangerous.
That is really dangerous. And futures, which is leverage as well. So basically, he's tried everything. I don't know. Is it he or she? I have no idea.
He tried everything of risk.
Everything, which is get rich quick.
Yep. That is often the mindset. Everybody in the world wants to get rich quick. I think it's being able to stop and have some patience and learn how to get rich, and it might be getting rich slow.
And unfortunately, what this person has done now, he's tired, broke, and I don't know what in the hell, confused. Yeah. I have no assets, I have no money, I don't want to give up, but it seems like I have no choice. Can anybody help me? I tell you, the biggest thing to do, if I just spent even an hour with this person to say, forget this trying to get rich quick, because you've lost so much time, which is really interesting, because most people who want to get rich quickly lose the thing that they're trying. They lose time, which is our most precious resource.
They lose time at also taking too high a risk. I would say get rich quick is too risky. In a way, you could call it get rich slow.
But then towards the end, it goes really fast because you know what you're doing.
The seventh wonder of the world, the
compounding.
And again, now that I've had the education, I now understand what you're saying and how that works. So it's not really get rich slow because of the compounding element, but it's get rich slower than you probably want to.
Yes, but then it speeds up towards the end, which is really interesting. Then it's like, whoa, right? Yeah. So the advice, he's asking for advice. The advice to me is this person should start investing first, get some profits, and then if they want to do a bit of trading, but you don't even need to. Trading in the short term is not really, is more difficult than most people think.
Would you say investing first or get some education first?
Well, the first thing has got to be education.
Yeah,
it has to be. But by somebody who has got a proven track record. Otherwise, forget it. Okay? Now we're going to ask, I think there's another poll here. What stopped you from starting trading? And I'm going to ask you the same thing.
Yep.
What stopped you from starting trading and investing? Is it A, I thought I needed more money, right? I didn't understand how it worked. Or C, I didn't trust myself to stick with it. Or D, I was afraid of losing everything. Now, this is really interesting. I'm going to ask you because I think there's a number here. But what would you say?
It is an interesting one because I'd say it's an element of all of them to a certain extent.
And if everybody could answer, by the way, that would be amazing. Go ahead.
The one I would say is strongest, what stopped me from starting to trade and invest.
Is which one?
I'd say B. I didn't understand how it worked.
That's what stopped you? Okay.
I'll probably say it, my lack of understanding, and then I thought one day, well, I'm going to give it a go.
I know, but listen, if you go to the root cause, like if you say, I don't understand, you'd still give it a go or not. It's 50-50. But if there was a fear, I was afraid of losing everything,
true.
That would probably have stopped you, right? So most people, it's D. Well, actually, I shouldn't say anything.
Where are we at?
And we are going to close it. We're going to close it. 3, 2, 1. Go ahead, everybody. Just choose one. 3, 2, 1, and close. Let's see what people think. It's not what I thought at all. Okay, so here are the results, although I can't actually see them, but I'm sure I will in just a moment. I think that the number one is I'm afraid of well, I think it was skewed because I'm afraid of losing my money. It's not afraid of losing everything. I don't think anybody's afraid of losing everything because you don't lose everything, right? But so the question was a bit, I still can't see it. Okay, so I didn't understand how it worked. Yeah, I didn't trust Do you know what it really is? I think deep down, I don't think people trust themselves to stick with it.
But would you trust yourself with your own money more than you're going to trust someone else who is a relative stranger?
I think that you would trust that relative stranger who has got a nice suit on and a tie and talks posh, a bit like you actually, a bit posh. By the way, we need to do it. I want to know, do you think he talks posh? I think he's got quite a...
I think I talk in a very articulate British manner.
A very articulate British manner? No, I love it, by the way. You sound like you come from Oxford or something.
I do, funny enough.
Oh, funny,
How did he know that, Marcus?
Okay, I knew that. But I think you give it to somebody, and I think you do that because you're then so relieved that you can blame them when they lose your money. Because then you don't have to blame yourself.
You can blame them, but it doesn't actually help.
It doesn't help at all, but it feels great blaming them.
It might feel great blaming them, but if you still lose your money or they lose your money, then you've lost your money. Yeah. And that's the realization I've come to is I want to live and die by my own sword, not by someone else's.
Yes.
And if I'm going to earn it, well, I'm going to invest it as well myself. Because no one cares more about it than me.
I mean, I certainly agree. So here are the answers then. Let's see, I didn't understand. So number one was I didn't understand how it worked. So that's the reason. You just didn't understand, so you didn't do it. That's interesting. Yeah. So if you don't know how to approach a woman, you just don't approach women. I don't think that's correct.
I mean, if you take the analogy of approaching women, it does take a certain amount of courage to walk up to someone and talk to them.
Definitely.
Whether it's a man going to talk to a woman in a bar or whether it's to take that first step into investing. And I suppose the more times you do it, the more you learn about it. But then, the more you do it with investing, is my consequence. The more I did it, the more confident I got, without a strategy, and then I ended up losing it. And I think that's probably the big difference.
So
If you
number
can be
one,
courageous.
then people are right. Oh no, they're not. They said I didn't understand how it worked. Right? I didn't understand. In other words, the education is the most important thing.
I would argue that's a good thing. If it makes people hesitant before they actually go and invest, and it makes people think about what they're going to do in building some strategies before they start investing, surely that's the most secure way of doing it.
Of course it is. Of course it is. You would not go out driving a car without first of all having at least some. But it's weird, isn't it?
And you say that, and for me, that's hindsight. And I look back at my past self and I go, what an idiot I was doing what I was doing. But at the time, I didn't think that. And hindsight is always great.
It's amazing. I think it's got a lot to do with mindset as well. What would you say?
It is to do with mindset. I think it's belief in yourself. I certainly had the wrong mindset. I thought I'd give it a go, but I kind of didn't really trust myself. I thought the other guys knew better. An asset manager knew better than I did.
You'd assume that, though, wouldn't you?
Did.
Why would you not assume that? You would assume that.
I think it's very natural to assume that. You've got regulation. Because of the regulation, you'd assume that they have the education, they have the strategies.
Do you know that most asset managers don't beat the market, and over 50% of asset managers, all they do is basically what Dave Ramsey just said.
Yep.
They basically pick the top stock, so therefore their result is going to be more or less what the market does.
Yep.
And my question is, do you really need to pay somebody 2 or 3% a year for that?
No, you don't. But I don't think you do need to pay someone to do that. No, absolutely not. But I think it's important for you to get the education before you take the step yourself. Now, the education isn't onerous. I mean, we teach 20 minutes a day. It's not onerous to go and do. It's just
the
having
first month you need to
understanding.
learn it, so it'll be more than 20 minutes. But after that, it shouldn't be more than that. And sometimes there's nothing to do.
Exactly.
Absolutely. Okay. So maybe it's the fear of messing up. Maybe that's it as well. I don't know. But I do believe that with the wrong mindset, without education, without support, I think, of course, you will fail. So education, it's not education, by the way. I think support afterwards, because you can have the best education. We can be the best teachers. We can have the best students, but without afterwards that follow-up support, that constant kind of being able to answer people's questions and even galvanize them and inspire them and remind them. Bitcoin reached its all-time high several times over the last week, several times.
Brilliant.
And if somebody didn't know that, they would have missed out on that.
Yes. I think part of the education is actually understanding the research and the need to continuously look. As you say, if you make an investment, you can put some stops within the investment, some limit orders, but it's also actually understanding what's going on. The point you made, I wonder how many people on watching this now knew that Bitcoin had just done 3 all-time highs.
I don't know. Let's ask them.
Yeah.
How many of you knew that? How many of you knew that it had over the last week several times? I think 3 times, 3 all-time highs. I mean, it went up massively, massively, massively. I actually sold some yesterday.
Did you?
Yeah. I haven't really told anybody. Yeah, I sold some yesterday.
Along a strategy?
Yeah, to a certain percentage. Yeah.
Yep.
And it's what we teach, right? So, okay. So here's my thing. My money is safer in the bank. Okay, the traditional thinker. I don't know whether we can show this or not, but basically, money in the bank, 3% annual interest. Inflation comes along, you're hardly left with anything.
I think you're lucky to get 3% in today's world, but
I think in a bank you can get 3%.
Can you?
I think so.
Well, let's say you can get 3%, you're still not going to beat inflation.
No.
So you're actually going to be in negative.
Investors' mindset is 10,000 invested with education, with support in stocks and cryptos, and you're looking for 8, 9, 10, 11, 12%, right, a year. And by the way, this is the other thing. People will get better and better every year.
Yep.
So it might be 9% the next year. It might be 10% the next year. But and before you know it, you're consistently doing some pretty amazing stuff. Because I mean, if I'm not making at least 15% a year, that is shockingly bad. Shockingly bad.
And why do you think you can make this 15% plus a year, but your asset manager doesn't?
I think several things, but one of them is I'm allowed to do things that an asset manager is not allowed to do. So, for example, and this is important, this is really important actually, is the fact that an asset manager has to have a marketing brochure on which they write what they're going to do.
Yep.
They cannot do anything but that is written there. Whereas me, with my own money, and everybody here, you could do what you want with your money. So let's say Bitcoin has a pullback. I can get into Bitcoin. If I'm an asset manager and I'm in stocks, I can't get into cryptos.
Okay.
I can't get into gold. I can't get into silver. I can't do any of those. I can't sell short either. I can't do any of those things.
You made a point just then that as an individual you can do what you want.
Yeah.
Do you think you should be allowed to do anything that you want without any education? Do you think that's fair?
No, I don't. I think that's dangerous.
Yeah, I do too.
Yeah, you do. Yeah, of course.
Of course I do, because I'm a living example of that.
No,
I wish I was limited into being able to put a spread bet on when I didn't really know what I was
What's
doing.
the alternative, though? You can't say to people, the FCA already is on the side of what they call, what do they call them? Widows and orphans. They assume there's the professional investors that know everything, right? And then there's widows and orphans. But what about people in the middle? No. They're all widows and orphans apart from the profession. In other words, the FCA says you can't do this, you can't do that, you can't do this. And you go, mate, I am an adult. So, for example, they took away a few years ago being able to get into Bitcoin ETF in your ISA tax-free. They got rid of that. And I got in just before for my kids. And they're up £642,000 on that. Why did they do that? They put it away. Because they believe that it's too much risk for the average person. And therefore, they took it away.
So a Bitcoin ETF is a higher risk than a spread bet? Is that what
I don't think so, but that's what they ruled. Because it was a new asset class and they didn't understand it. Don't forget, the regulator is always 2 years behind. So they're regulating something over there, right? And they're going, blah, blah, blah. And suddenly there's tap on the shoulder and they go, there's this whole new asset class called cryptocurrencies. They go, now I have to learn about it? Then I need to regulate it.
So what you're saying is that is regulation to stop anybody doing anything they want, but it's 2 years behind, so it's outdated by the time it actually comes into play.
At least 2
years behind.
It's probably 5 or 6, right? Let's have a look at some questions here in the chat. Let's have a look. Oh, some people took profit here as well. Where do you park your money while you learn and implement the IM strategies, banks, ETFs, and bonds? Well, that's a really interesting one because some people want to go live immediately because they think that's the best way to learn, whereas we put them on a demo account while they're learning. But the strategies can be learned within several months. So there's, just wait until you do something.
Yeah, so I think that the question Jerry's saying is while she's waiting that couple of few months.
It's just a couple of months.
Where would you put the money? Would you put it into the bank? Would you put it into an ETF?
Put it in the bank.
You'd put it into the bank?
Put it in the bank because you need it liquid immediately. You could even put it into your account and wait.
Yep. Okay.
Let's say the bank is withholding my money and not releasing it. What? The bank is withholding your money and not releasing it?
Really? How can that be?
What? Why is that? How is that possible? What did you do something? Did they do something? I'd love to know more about that because that's pretty scary. Because they say that as soon as your money goes into the bank account, it's no longer your money.
It's the bank's money.
Well, it's not, but actually, if we all went to the bank right now and demanded our money, they don't have the money. They have 5 to 7% of it there. So therefore, they'd have to ask you to come back the next day or the day after. The money's not there.
Well, isn't it double counting?
Yes,
it's actually all the money. Yeah, exactly. I don't
they're out lending it to somebody else.
Exactly. So
but it's our money.
It is our money, yes, but it's been double counted.
Absolutely.
And that's the whole risk of the capitalist society and of the banks that we live in, the institutions.
Well, we saw that in 2008.
We certainly did.
And who bailed them out?
So can I ask a question there? In 2008, as you started today off saying that the Amazons and the Googles of the world are a safe investment to go in. And I agree that they're a lot safer.
With a strategy, sorry.
With a strategy.
Yes. Because if you just invest, then I don't know. It's going to go up or down. It's gambling.
And then what happens if the events of 2008 happen again?
Yes.
Then how can being in Google or Microsoft protect you against that?
So it won't totally. There's no way that it will totally do that. But what it will do is you'll be in the safest of the safest. So they'll go down the least. That's number one.
Okay.
They'll be the first to rebound, number two. And with the strategy, don't forget, what I'm doing is I'm getting in at predetermined prices. Not knee-jerk reaction, I need to get in today because I don't feel good. Yeah. But predetermined points. So not only will I be in profit earlier, I'll have more money invested at lower price points, and I will make more money and percentage gains, even if it only goes back to where it was. In fact, I'll be in profit even if it goes halfway to where it was. It doesn't even have to go back to where it was. But the person who's got all their money invested there, that's not great. You're in trouble. That's why you need a strategy. Okay, so we are going to finish things up here. Unless there's any questions, let's have a look. Oh, we had a little poll there. What would you do with 10,000? And we had investing it. But with a strategy, hopefully. This is so important that you understand this. If you take profit on your crypto, asks Jan or Jan, and put it in US dollars or US dollar, and the dollar is being devalued, what is the best place to keep the profit that you take? What would you say about that? If you take profit on your crypto and put it into dollars or stable coins?
I wouldn't. I would compound it up. And I've learned that through the strategies at IM, is compounding your money is what makes that slow investing speed up rapidly over time.
So not keep it there, try and invest it into something that maybe has fallen. So your profit on something, this is where the diversification comes in. You want to be doing into something where when some of them are going up, some of them are going down, right? Yep. And so you're investing in the ones that are going down, but you're coming out of the ones that are going up. But obviously most people do the opposite, right? Fun Video says, this is the bank. I transferred a lump sum from my TradFi bank to Revolut, and they're doing the checks that take days. Who's they? The bank or Revolut? I was recommended Revolut as being better than most. Meanwhile, I don't have access to my money. So it's just been a few days, or?
So I'm guessing here that the transfer is taking a few days, so you all get the money back. It's not as if they've restricted you and they're saying you can never get your money
I'd love
back.
to know.
That's the case.
Yeah, let us know next week whether you have that, because that's scary, of course, because it is your money. If the market crashes, says asked Junita, it will keep recovering, right? So isn't it a good time to buy more? Yes. We had a couple of years back, we had the COVID scare where things went down very rapidly, within weeks, 50%.
Yep.
And all we did was and then they went, and then it went all the way back up. And it was not easy to do, because you were, like that. It was like, follow the strategy. I am just prepared to wait longer. So when we go into a bear market going down, I am just prepared to wait years if I have to, and most people aren't.
But I think the question is also asking, do you ever have the fear that it's never going to come back?
Not if you choose the right stocks, no. I don't have that fear. No.
That's an important point.
Convert it back. And if you do, then go into not a mutual fund, but an ETF, because ETFs charge maybe
What's
0.5%.
between a mutual fund
Well, a
and
mutual
ETF?
fund generally means that there is an asset manager. They need to get paid, so they'll charge you 2, 3, 4, 5% a year for that.
Okay.
But an actual ETF is an exchange-traded fund which is set up for you. There is no manager, because it's just, the top 500 companies could be the S&P 500 ETF.
Yep.
And then you are already diversified without there being a manager. So that's the best way of doing it. Okay. Now, by the way, you can have access if you want to get started. And I think this is the thing to do, is to educate yourself on how to manage your money first and foremost. So I don't know whether we can show this, but in the chat below, you can have access to our free money management calculator. Please start there so you can start mastering your money like rich people do. Don't just have one bank account. Start putting it into several bank accounts. Okay. Brilliant. So thank you so much.
Pleasure. Well, thank you for having me.
I thought that was fun.
I thought it was great fun.
Brilliant. Now, next week, we are going to be talking about, is saving money actually making you poor? What do you think about that?
Is saving money actually making you poor? That is a very good question. I guess it's where you put your money, where your savings are, how you're treating your savings, and how you define poor.
Saving money is definitely making you poor because of devaluation and inflation. But let's talk about that next week. So thank you to my guest.
Look forward to it.
Thank you, James. And we look forward to seeing you next week. Take care. Bye-bye.
Cheers.